So now we're to vertical analysis. So this is a little bit different setup than your horizontal analysis, but it's the same idea of converting all of the data to percentages so that you can compare it, much more easily. So with the income statement, what are we looking for? We're going to state all of the items on our income statement in terms of their relationship to net sales. So we're going to set net sales to 100%. Okay, so net sales is 100%. Okay, so what we do is we're going to divide each item by net sales. So for cost of goods sold, we go the 465,000 divided by the 750, and we would get 62%? Okay, so that would be 62%. And that, rather than write percent each time, I'm going to just use. Okay, so this would be 100%. I guess I should do the percentages. Makes more sense. All right, so 100%. This would be 62%. And then we'd go the 285 divided by 750. And that would give us the percent cost of goods sold is of net sales. So we would do that for each item as we go down. So 105 divided by 750, 60 divided by 750, 36 divided by 750, and right on down to the bottom. So we would get, this is 14%, 60 divided by 750 is 8%, 5%, 27%, and 84%. And then to make it useful, you do that for each year on the financial statement. So for 2019, you'd be dividing everything by the 600,000. So you would go 390 divided by 600,000, and that would give you your percentage there. So that's, I think, 65%. And then 210 divided by the 600,000. 35%. And then you'd go right on down. So you get 11%, 9%, 5%, and 25%, and 11%. Okay, so now we get down to taking a look at it, and we can say, okay, so just looking at the raw numbers, your net sales increased from 600 to 750. That's pretty cool. Your cost of goods sold, as you would expect, might have gone up as well. So you're sort of looking at the raw data. But now, doing the vertical analysis, we're able to see how things increased, sort of in relation to each other. So, gross profit as a percentage of sales increased from 35 to 38 from the over the year. All right. So your cost of goods sold actually decreased as a percentage of your operations during that same time period. So that's interesting. And then when you go down a little bit further, you can say, oh, your selling expenses as a percentage of net sales increased. You think there's another party in the sales department? Okay, and so then administrative expenses as a percentage went down. Your income tax expense stayed the same as in terms of percentages. Your total expenses actually went up a bit, but your net income, in terms of percentage, remained constant. So as a business owner, this gives you the ability to sort of focus in and say, okay, so we might have been operating a little bit more efficiently here, okay, those percentages went down, but here, again, we better go look and see what's going on in the sales department. So vertical analysis is very useful with you just have to remember that you're setting net sales to 100%, and everything else is stated as a percentage of that. I will see students, common mistakes that are made, they'll set net income to 100%. That makes no sense at all, okay? It's got to be net sales. Another thing is, if you are presented with a problem, and I don't know if they do this in your homework, but you have you might have a situation where it's sales revenue, less your sales returns and allowances, and then less your sales discounts. And then you get to net sales. You have to remember that net sales is 100%. Okay, so this is your starting point, is net sales. So if you had sales revenue might have been 105%, and then this might have been 3% less and less 2%, and that gets you down to net sales. So just keep in mind what net sales is. Okay, so that's a vertical analysis of the income statement. Next we'll look at how it works on the balance sheet.